Distinguished guests, ladies and gentlemen, my name is Stephen Gray, and as Vice Chair of the UK Ghana Chamber of Commerce, it gives me great pleasure to chair this event today and welcome you to the UK Ghana Chamber of Commerce first quarterly tax dialogue series for 2021. The relationship between the public sector and the private sector has to be built on a foundation of mutual trust and respect if a country and society is to deliver growth and prosperity across the nation and to ensure the timely delivery of services that are for the public good. The impact of COVID-19 upon Ghana these past 12 months amplifies the importance of this social contract even more so. It is often perceived by governments that businesses are strongly opposed to paying taxes, resulting in lower tax revenues and hampering social developments. On the other hand, businesses regularly highlight the need for a more skilled workforce and better quality national infrastructure and want a level playing field within and between countries, and often express frustration with an opaque tax system and at best a challenging functioning of the tax audit system. But clearly there is some common ground between the public and private sector, and there is a need to build this ecosystem that works for all parties and a forum to encourage open dialogue without fear or favour. This is where the UK Ghana Chamber of Commerce seeks to deliver an unbiased advocacy support to its members, and over the last 5 years has solicited its members' views through annual business environment surveys and in arranging events such as this, the quarterly tax dialogue series, to ensure valuable and constructive dialogue can occur and that the voice of business can be heard as policy and regulations are crafted by the government, and for the government to articulate the challenges they face. In doing so, we hope to build this foundation of trust and respect between all stakeholders. Today's event, titled Examining Ghana's Tax Policy and its Impact on Business, cannot come at a more timely moment. We're coming out of what has been undeniably one of the most challenging years in recent memory for Ghana. This has resulted in a tight fiscal environment for the government and the need for the private sector to repair and grow their businesses so that the scars created in the last year can heal and shared prosperity and job creation can happen and continue at pace. Today, through this event, we are seeking to promote a deeper, more nuanced understanding of business attitudes towards tax and hearing directly from the Commissioner General of the Ghana Revenue Authority, Reverend Owusu, and the head of the Tax Policy Unit at the Ministry of Finance, Mr. Daniel Nuer, on their perspectives and reflections on how the evolving tax policy may impact businesses in the years ahead and support economic growth. I do encourage everyone on this webinar today to actively engage with the event by posting these questions in the Q&A box. But without further ado, it gives me great pleasure to hand you over to today's moderator, Mr. Abeku Gyan-Quansah, tax partner at PwC Ghana, one of UKGCC's members. Thank you.
Thank you very much, Stephen. And Steve, good morning to everyone. As your moderator for today, what I would attempt to do over the next 15 minutes or so would be to clearly set the boundaries for today's conversation. And the need for those boundaries are that we are privileged to have the one that drives tax policy in this country and the one that implements those tax policies in this country. And of course, since they are very, very busy men and we get the opportunity to meet with them today, we just need to ensure that we maximize their presence at today's conversation. So over the next few minutes, what I've attempted to do is to go through the survey reports that was referred to by Stephen, and then to look at some very few recent developments, all with a view to ensuring that at the end of the day, the 1.5 hours that we're going to spend together here is very well used. So going on and moving on from here, we recognize that, as Stephen said, we're going to have an open conversation. So the first agenda point that we should note is that this dialogue is meant to be open, meant to solicit feedback from the business community, meant to get government's perspective on certain issues, and then we would zoom in straight into the panel discussion. Then, of course, we would not have a full conversation without having you participate. So we would need you to ask your questions, provide some contributions, and of course, get some feedback from our distinguished panel members. So moving on today, as I did indicate, we would be looking at 4 areas. We'll look at the Business Climate Report of 2019. We'll look at the COVID-19 Business Impact Survey. We would move on to look at current tax development and impact on businesses. And then lastly, the way forward. All right. So when we get to the section for the way forward, I would ask you to note down a couple of contributions that you have for government, some government feedbacks on them, some things that the UKGCC does from the advocacy perspective. And of course, as your moderator for today, I would also share certain feedback for government consideration. Now, a quick summary of the 2019 Business Climate Report. And the whole idea of this report is to provide some insights into the business and investment climate, all right? And to situate this in context, as at the end of 2019, the UKGCC active members were about 105. 41 of these members participated in the survey. And as Stephen said, the whole idea of the survey was to get their views over the last 5 years or so, what members thought about the economic environment, about the business environment, and about the investment climate. It is worth noting that the highest group of respondents did indicate that the area of economics that require a quick reform or an immediate reform was tax. So there were about 5 top areas that came, and tax alone accounted for about 29.3% of the respondents, rating tax as the highest area that requires quick and immediate reforms. It is also interesting to note that about 41% of the respondents did indicate that tax policies were not as effective as they ought to be. And in providing their reasons, a number of them attributed this to multiple audits that takes place during a year, and also the unfair objection process. And by that, what they were talking about was that if you have a case with the revenue, before the revenue would hear you, usually you need to make a down payment of about 30% if you are dealing with domestic tax issues. So 2 of these actually led respondents to rating tax policies as not being as effective as they would. Some of the interesting things I found about the report was that respondents did indicate that, look, by addressing these concerns that they have, they believed that the business environment would improve and the likelihood of people avoiding and evading taxes would also reduce. And they believe that all this would go ahead to support government's agenda of really getting the country beyond aid. So this is just a quick summary of the findings in the climate report of 2019. And if one may want to find out why are we talking about 2019, one would say that, well, 2020 is an exceptional year, a year that changed so many things. And therefore, it is important that we look at a year just prior to COVID coming into place in order to understand how businesses were thinking during those times. Having summarized the findings in the 2019 Business Climate Report, the next thing I would seek to do as your moderator is to quickly once again summarize the 2 reports that you had in 2020, measuring business impacts of COVID-19. And what are these? As I said, there were 2 reports in 2020, one on the 22nd of March, and the other on the 20th of May, measuring how businesses were responding to the impacts of COVID. So in summary, those reports looked at the impact of the current pandemic and how they can inform policies. Now, just as I did share the number of respondents in the Business Climate Report of 2019, in the first survey report, or in the first COVID-19 survey report, there were 62 respondents. And then in the second report, there were 42 respondents. As far as tax is concerned, in the first report, tax rated as the second highest request of an area of support that business needed. And in respect of that, businesses were asking for tax breaks and tax holidays, as well as a suspension or a deferment in how they would report. Looking at the second report that was also issued in 2020, respondents did indicate that, well, their fear was that as soon as 2020 was over, government will be forced to increase or introduce new taxes. The last thing that was sort of revealing to me was that the survey impact report, or the COVID-19 business impact survey report, also indicated that it was just about 30 or 31% of persons who participated in the report that were aware of the various interventions that had been introduced by government. Moving on, in terms of the current tax development and impact of businesses, I would want to summarize this once again, just to define the context of our conversations today. The first thing that we need to note is that several reforms have taken place at the Domestic Tax Revenue Division. And in this respect, what has happened is that previously, the Domestic Tax Revenue Division, for the purpose of tax administration, was divided into three different office types. So we had the Small Taxpayers Office, the Medium Taxpayers Office, and then the Large Taxpayers Office. The reform that has taken place at the Domestic Tax Revenue Division is to the effect that we no longer have the small and the medium taxpayer offices any longer. These offices have been combined, and now we have what we call the taxpayer service centers. And there were various reasons that government gave to be creating and merging those two offices to create the taxpayer service centers. It is worth noting that these taxpayer service centers would operate under what we call area offices, and those area offices would have centralized audit teams, and of course, they would have managers assigned to that. In the whole of Ghana, we have 10 area offices for the purpose of administering taxes. As long as you are on this webinar today, we would encourage you that in corresponding with your offices, if you are the small or medium taxpayers office, you don't describe them as such, but you describe them as taxpayer service centers. And of course, I will give an indication that you are up to speed with what is going on. Another area of change that is worth mentioning before we receive the initial comments from the Ministry of Finance rep and then the GRA rep is that to deal with disputes, and as you would recall, about 41% did indicate that tax policy was quite ineffective because of the objection process and matters relating to audits. So what government has done is that last year a new law was introduced, actually an amendment to an existing law, saying that a tax appeals board will be created. So now when you disagree with the GRA, you don't just look at going to the High Court to litigate the matter, but then taxpayers have an option, or not even an option, they are required to actually appeal to a tax appeals board for the matters to be heard. The interesting thing is that in this year's budget, specifically paragraph 535, government is saying that the executive secretary and the members of the board would be in place by the first half of this year. So hopefully before the end of June, we should see this board in place. And I have a couple of questions, obviously, I'm going to ask when we get into the panel discussion regarding this board. The other thing that we need to note is that in the 2020 budget, government did propose for Parliament consideration certain tax concessions for some businesses that have been deeply affected by COVID-19. Interestingly, that law has now been passed and is available for one to read. The interesting thing also is that government says that we need some money to be able to support ourselves during this COVID-19. So a new levy known as the COVID-19 Health Recovery Levy has also been introduced. There is also the penalty and interest waiver. Government is saying that, look, I understand how COVID-19 has affected the cash flows of businesses. So if you meet certain conditions, I would also waive your penalties and interest associated with periods of non-compliance before 2021. And then lastly, a couple of questions, of course, I'm going to ask when we get in, was that last year, the GRA and of course government did introduce some COVID-19 concessions. A number of them did not have any sunset clauses or any period after which they would not apply. So we would seek to get some answers from the government's rep today on which of these measures still exists and which of them have been eroded by time. Lastly, as your moderator, and just to ensure that we do not have a session where we are going to talk without actions, I would be collating, and of course, I'm sure the chamber would assist in doing this. Let us aim at getting at least 2 feedbacks that government can work on immediately with respect to this conversation that we have today. Remember, it's an open dialogue, and a dialogue involves an exchange of ideas. So we're going to take some feedback from you. We'll drill down, have about 2 of them sent to government as areas that they need to look at. The other thing that we'll be looking at is that in the area of tax mobilization, we'll seek to get just 2 areas from the GRA rep today on areas that government believes would be enforced to be able to raise the amount of revenue that we need. Obviously, we would want the Ministry of Finance rep in charge of policy or tax policy, to be specific, to also share with us at a minimum 2 areas probably could come as a result of the feedback where government will take immediate action and then work on. And then, of course, the GCC, as part of its advocacy role, will be looking at just 1 area where they would actually support its members in this advocacy drive to ensure that businesses operate in an environment that is conducive. And well, as your moderator, I would want to ask that looking at the number of laws that we have passed, looking at the number of laws that we pass each year after the budget is presented to Parliament for approval, is it about time to simplify our tax administration in Ghana? Is it about time that we do what is present or what is available in several jurisdictions, where we have just a single consolidated law each year that seeks to consolidate all the tax measures that would be amended or that will be introduced for consideration by Parliament in a single document, so that instead of picking a law for income tax, a law for COVID-19 health recovery levy, a law for penalty and interest waiver, and all the others that I didn't list here, we just have that single law that when I pick for a particular year, it has everything that I need as far as tax measures for that year concerned. Is it about time that we need to be thinking about this? In any case, we have a similar one on the expenditure side, which we call the Appropriation Act, which seeks to consolidate a number of our expenditure lines. So should we begin doing same for tax measures? So at this point, I would want to take a pause here and then straight away go into introducing the panel members for today. So for today, we are represented by, or we have on this discussion, on this webinar, the head of the tax policy unit at the Ministry of Finance, Mr. Daniel Nuer. Mr. Daniel Nuer is an accomplished tax policy person and a tax administrator with over 33 years experience in tax administration and tax policy. Mr. Daniel Nuer also holds an MPhil in tax policy from the prestigious University of Pretoria in South Africa. So we would be hearing from him today. And also representing the Commissioner General of the Ghana Revenue Authority is Mr. Dominic Naab. And Mr. Dominic Naab is the special aide to the Commissioner General at the grade of Assistant Commissioner. And it will be interesting to note that he is the author of 2 books, Oil and Gas and Mineral Taxation in Ghana, and also Essentials, Pillars of Tax Audits and Tax Investigation. So I think for our webinar today, we have very distinguished panels who would be doing justice to what we have. Thank you very much. So Daniel and Dominic, thank you so much for joining us today. And having introduced you, I would want to give you about 5 minutes each for you to respond to what was shared from the various surveys that have been done by the UK Chamber, area of the climate report of 2019, the 2 business impact survey reports, comment on the current tax developments and impacts, and then lastly, the way forward. So Daniel, I may want to start with you. In the next 5 minutes, please give us your reaction to this and then any other comments that you would want to share. Thank you very much.
Okay. Well, good morning, everybody, and thanks for the opportunity to engage with you. I'm always happy when we have to engage with our stakeholders because generally, for those of you in business, you have the golden eggs that we need. You lay the eggs for us. Without you, there's not too much we can do. For our friends, the consultants like Abeku, they facilitate the work we do, just as they facilitate yours. So as intermediaries, it's good to be always engaged. And Abeku will tell you that we're always engaging. So to the extent that he calls me uncle instead of just the normal names that you use. But then we all know that domestic revenue mobilization is important for government, and it helps us to fill our revenue gap and also reduces our dependence on aid with so many conditions and other things that go with it. Now, as part of the Ghana Cares program, which was launched as a response to the COVID, the public sector is supposed to finance about 30% or 30 billion out of the 100 billion budget. And so we are looking at this, collecting this 30 billion over the period to 2023. And so we have just about a 3-year window to move tax to GDP from 13% to about 20% in order to be able to fulfill this, get this done. And so it becomes a bit interesting because the COVID had quite a big effect on our revenues. Basically, we expected that the shortfall was around 13 billion cedis overall. The tax shortfall was about 2 to 3 billion. Thankfully, initially the target was 47 billion. We moved it down to 42 billion. We ended up at around 45 billion Ghana cedis. So we sit somewhere in the beginning when it comes to tax revenue. But overall revenue, including petroleum revenues and others, we had a shortfall of about 13 billion. And so it gives a good idea of what really has been happening in the economy and what we need to do to get things done. So government came up with what we call the CARES document, which is a 3-year recovery program. And in it, there are a few policy options that we looked at. I'll come to the things that we raised. Now, some of the policy options really, they were not too many, but they were overarching. First one is COVID has brought out that if we were not using technology, if it hadn't been on our table, there's a need to put it on the table. Fortunately, technology was already on the table. And so what we are looking at is speeding up the use of technology for everything that we have to do. Filing, tax administration, tax policy engagement. And so we are engaging today online instead of meeting face-to-face as we would have done some time ago. And all these innovations, basically we need to. And so we are using that one to see how best to get things done in a very structured way. The other thing we are looking at is, and Abeku talked about legislation. One of the things we realized that the major legislation was passed over a period between 2013 and 2016. There were 5 major laws that were passed. There's a need to review these ones because there are some conflicts and others. We've already reached out to our friends, the consultants. We will be reaching out further this year to stakeholders to see which areas need some work on it, where are the ambiguities, where are the conflicts, and so that we can update these taxes and modernize them and bring them up to date with some of the things that we are doing. For example, there's the general talk of taxing the digital economy, which where almost of us have moved into. How do we now find the goose and pluck his feathers now that it's gone virtual? Previously, it was just in front of me. I can chase it, get some kids to help me. Right now, I can't. I have to go virtual. So how do I find them over the Ethernet and all those other things? The other thing that has been niggling is the issue of tax exemptions. And tax exemptions are an interesting thing. Tax expenditures, for me, are something which worldwide everybody indulges in. But it's more of how do we do it, how do we manage it, how do we prevent abuse, and ensure that it's targeted in a way that these expenditures benefit everybody and not just a few people. And so it's one of the things, major things that we'll be looking at over the period. We've talked about technology, and the other thing too is how do we widen the tax net, not in terms of just people, but in terms of depth, in terms of places, things that we need to do which we are not doing. And so these are also things we are looking at under the CARES program to broaden the tax base. There's a lot of talk about extractives. How much of it is myth? How much of it is reality? These are things that we are looking at to see where the real leakages are in terms of all these areas, in terms of each of the sectors, and then based on that, use the analysis we do to come out with a few more things that will help all of us generate the revenue we need to generate. Tax administration is also being looked at. Abeku just mentioned the issue of the restructuring of GRA. There are a few other things also going on to ensure that tax administration meets the challenge. Because if you have a good policy and tax administration doesn't step up, I mean, there's no use having the policy. And if you have a good administration and policy cannot be implemented, we are still back at square one. So the issue is to work on these synergies such that we both work together to help everyone so that we can increase domestic tax compliance voluntarily, so that everybody, all of us will get on board and work together. We'll also be looking at customs operations. The ICOMS was launched last year. We also have the petroleum monitoring, which is also going on. There are a few other things that are being looked at in terms of on that side, so that together we'll be able to come up with the development we need. Abeku talked about the Independent Tax Appeals Board, and he's been one of the advocates for this board for I don't know how many years, and it's something that all of us have been working on for a while. Last year, the Revenue Administration Act was amended to introduce the board. We expect that by June we would have made the necessary appointments because of the elections and the time for appointing ministers. The ministers have just been appointed, the deputies have been appointed, and so it's caused a few delays in that, but we expect that within the first half of the year, the appointments can be done, then the secretary can start setting up so that we'll all have that ease of looking at issues relating to decisions made by the GRA, so that we stand between that period of going to court, which can be very expensive. The board has a certain period within which it will work, and procedures and policies will come out. All these things will be made known to us. And as it happened, there was also another amendment that was made to the Revenue Administration Act, which I think is in all of us our interest. The Act produced what we call the voluntary disclosure procedure. Now, the voluntary disclosure procedure is something that allows a person who has defaulted in some way or the other, then it follows, it's beyond the amnesty we are granting this year, to come, when the person comes forward and declares that, look, okay, I've realized there was this omission, or I didn't file this return, or this error, there was this mistake, and the person corrects it, then any penalty on it will be waived, so that the person can make the payment and then without making a penalty payment. And so that's one of the other things that was there in the amendment. So I think I'll pause here. The other things that were raised in the we raised in the reports, because I think my 5 minutes is up or is more than up, and I don't want to go far beyond it. But aside from that, it's good to know that the people were not. It's good to know that people were aware that there will be a need to increase taxes this year, so they shouldn't be surprised that we've done something of the sort. We will continue with these discussions as we go on. So let me pause here for the term. Thank you.
Okay. So thank you very much, Mr. Dominic, the head of tax policy at the Ministry of Finance. Dominic, I would begin by recapping what Dan said, that there is no use of policy if the tax administration is not as effective as it ought to be. So, Dominic, you have 5 minutes to give us your opening comments, which is in essence on the reports that we are discussing today and on any additional matters before we get into the panel session. Thank you very much.
Yeah, thank you very much. For us, we are examining Ghana's tax policy and its impact on business. This, as far as I'm concerned, will be viewed or can be viewed differently by whoever is actually looking at it. It is either the cup is half empty or half full. I must admit that the Commissioner General has a very clear-cut role, and his role is to administer taxes in Ghana. Once laws are passed, then what he has to do is just to ensure that he effectively administers taxes, and that is just what it is. Now, taxation is of a great concern to business, the community, investors, and for that matter, their decisions as well. What it is that we raise revenue based on what the tax laws, are. If you look at the sub-region, as Mr. Nuer pointed out, the tax to GDP is around 20%, but we are hovering around 13%. That tells you clearly that we are not doing so well, either because we are too humane, or probably the structures, are not too conducive for us to be able to do so well. That notwithstanding, the government has been very sensitive to business community. Anytime a budget is drawn, their inputs are always taken on board. And you can also agree with me that when the COVID actually became so serious last year, whilst other areas may not be doing so well, other areas will do so well. So we have to actually take advantage and look at the other areas that are doing so well and not to overburden the other areas that are not doing so well. The Minister of Finance, at his verdict, mentioned that the budget for 2021 is actually a battle cry budget. That is to say, yes, admittedly things are difficult, but the government has a role to play to provide infrastructure, to create employment, and to also ensure that certain social interventions are actually rolled out. It goes without saying that that cannot be done unless we are able to raise the needed revenue. So what it means is that we all have to actually work hard to be able to actually bring in the needed revenue. It is also very instructive to note that taxes are actually not on capital. Taxes are on income, that is profits. You make profit, you pay tax. You don't make, you don't. Then when it comes to VAT and then the other distance, of course, if you look at VAT, often the business community talks about the fact that it is so high. Yes, admittedly, the point is that it is a consumer that actually pays. So if you ask me, what it is that business community actually collecting it on behalf of Ghana government. And when they incur sale, they either take it as an input or it is added to their cost. That is what it is. Now, a mention was made about the fact that the tax laws are actually scattered, making it very difficult to either understand or to even follow. That is very true. GRA, realizing this, has responded quite adequately. Over the years, we have come up with a practice notes trying to simplify the laws. We have also responded quite smart when it comes to private rulings. and class rulings from the business community. And these are all geared towards helping the taxpayer to actually be able to run their businesses, very well. Now, if you look at the Income Tax Act 896, the rendition is all about self-assessment. So what it is that the business community can assess themselves, tell us how much your expected chargeable income is and how much your taxes are or would be, and come and furnish with us. You have the right to revise as and when it becomes necessary. That again is also quite humane and very a good response to the cry of the taxpayer. We have also realized that yes, it is true that things are very difficult. We need to also ensure that we are able to reduce cost to the business community. What have we done? We have embraced the digital, platform, such that you can pay online, you can file online, and you can render other services online. That is just to ensure that we are able to reduce cost, to businesses. Again, another important thing that we have done as GRA is to establish what we call tax audit and quality assurance. The tax audit and quality assurance is actually a department that has been set up to ensure that we are able to improve quality and also to ensure that our officers who are very, quote unquote, very irresponsible can actually be brought to book. That is the essence of it, to add value to the taxpayer. We have also felt that tax paying is not actually very easy. So we need to actually sensitize our staff, everybody within GRA, to appreciate that the taxpayer is very critical. If the taxpayer is very critical, we must actually ensure that we make tax paying less tasking. We should do whatever we can do to ensure that the taxpayer is able to actually pay the taxes and pay quite, well. So I will end here, and then as and when the questions come, then we can look at them. Thank you very much.
All right. So thank you very much, Mr. Dominic Naab, and you have really established the foundation for our conversation. Just to remind ourselves again, the objective of today's webinar is to address issues that arose from the feedback that the Chamber received through its 2019 Business Climate Survey, to look at 2 reports that were done last year, and then to provide inputs for policy directives, the design of tax policy, compliance, amongst others, and of course, to provide a platform for conversation. So in the next 20 or so minutes, what I will attempt to do is, having gone through all these reports, I'll be asking our panel a couple of questions, and then hopefully we would get some responses for which we can together work with. So my first question to, I won't call him Uncle Dan, Mr. Daniel Naab, Mr. Daniel Nuer, is from the tax policy perspective. Now, from 2017 to 2019, government eliminated a number of taxes. But it's interesting to note that from the report that was surveyed, or the survey that took place at the end of 2019, the top reform area that the Chamber got was with respect to taxes. So in your view, what do you think accounts for this? Because from government official communication and everything that we know, government claims we have reduced, we have removed, we have repealed, but still the perception is that no, tax requires a lot of reform, because the respondents felt that the position 5 years ago was actually better, and 5 years ago that would be somewhere in 2014, 2015. It's actually better than what they had at the time they were giving their responses in 2019. So, Mr. Nuer, what are your comments on that findings? Thank you very much.
Okay. Right. Thank you, Abeku. And It's interesting to know that, and looking at the report, I realized that there were two main areas that led to this conclusion. And they were not really policy areas, they were more administration. Multiple tax audits, and then the objection process. Okay, the objection process was both, both a policy and an administrative issue because of the way they were. The audit issue has been addressed basically by the audit and quality assurance unit that is set up. To avoid the multiples, they will sort of manage these things on the tax side. And then the objection issue is also part of the reason why we set up the Independent Tax Appeals Board, to sort of help with some of these things. And so we expect that there will be a way of looking at it and sorting it out. The objection issue is a bit dicey. The essence of that clause is to prevent frivolous objections, which happens in several cases. And as a former administrator myself, I've been faced with so many situations, and some that we had to refuse. Fortunately, we're doing a lot of analysis at the time. So I analyze your payments over the past period, you bring an objection, and I show it to you that, look, all the objections you've made, are given. At the end of the day, they amount to nothing. So we were able to do some of these things. So so there are 30% to make sure that we don't get frivolous ones. If there's a problem with the objection, you can still appeal to the Commissioner General. The appeals board will also be there for you to appeal to. The Commissioner General says that 30%, but I believe that the 30% is too high, or for these reasons. And the Commissioner General has revised some of these provisions actually before, where there was we were supposed to pay 30%, and he deferred it in certain cases, looking at the case. So I mean, there are ways out of that. And so if those are the two reasons why tax hasn't done well, that makes it a bit interesting. But then I believe that the other reasons which we can look at, we are always working with our partners or our clients, as they are called, the taxpayers, as others call taxpayers, so that we can smooth in these things. It's these discussions that will help us to see how best to get things done. As I said, Abeku calls me uncle because we work together a lot. We have a lot of debates and discussions on some of these issues, and invariably we come out with conclusions that benefit all of us. So let's continue the discussions. I believe we can come to a fair agreement on how to deal with these things.
All right. So thank you very much, Mr. Nuer. Let me quickly go to Mr. Naab, almost asking the same question but from a different angle. So Dan did talk about the tax audit and quality assurance unit that I choose to call TACA. So with the setup of TACA, Mr. Naab, how would GRA attempt to deal with, once again, the unfair perception or the unfavorable perception arising from the multiple repeats or multiple audits and the quote-unquote what has been described as an unfair objection process? Because we all know TACA was outlawed in June last year. Practically, what has been going on and what relief do taxpayers have? I know you did talk about some of the rules of TACA, but if you could go a bit into a lot more detail to deal with this negative perception that came from the report. Thank you very much.
Thank you very much, Mr. Abeku. Yeah, I think that the issue of multiple audits have been a great concern to GRA. That is very true. And attempts have been made and are being made to actually reduce them significantly. But what is also important is that it may not actually be multiple audits, but frequent visits to the taxpayers to look at certain aspects of the job. We have what we call issue base. I may just go and look at only one aspect of the client's business. Then another time an issue comes up and then I have to go and look at another area, not necessarily that same area. But as far as the taxpayer is concerned, they are being harassed. That is actually appreciated. The other issue is that, yes, an audit can be done, but when there's a fresh information, that actually gives rise to another audit. The GRA would have to actually go ahead and conduct that. Then we also have what we call the quality assurance. Now, TACA, as you have mentioned, they can also go and do quality assurance audit. Yes, an audit has been done, but they think that the processes were actually not properly, rolled out, or they felt that there are certain information that have been vitiated by some other information that has come up. That would actually also call for an audit or a re-performance, as it were. So, but I think that we have to actually be also minded, because if our clients are complaining, then it means that there is a cause. If there's a cause, we must find a way of actually solving them, because they exist to also allow us to exist. If they are not there, we are not there. So that is actually an important point. Now let's look at TACA, that is Tax Audit and Quality Assurance. Indeed, it has been established, just as I said, to look at the quality assurance bit. But there's also another very important aspect of their work, and that has to do with dealing with aberrations of some irresponsible GRA staff. I don't know if they have already launched, but they are supposed to actually adopt numbers, so that any taxpayer who feels harassed, they can call the number, and then TACA will take it up to ensure that some kind of investigation is done. If the officer is culpable, then the necessary sanctions applied. That is also what TACA is supposed to do. Now, yes, you would agree with me. Yes, TACA actually started last year. That is very true. And unfortunately, we had this COVID that actually created a lot of problems. So I'm not sure they actually did so much. But that also gave them the opportunity to put their houses in order and to put in place structures that would ensure that they are able to do effective work going forward. So over the period, they have been designing modules that would ensure that all officers actually use them to ensure some kind of consistency, and also to sensitize staff about the presence of, if you like, a military police that can ensure that if they misconduct themselves, there are some sanctions that can also be applied, and also to assure staff that their work cannot actually go unscrutinized. There's a body or a department that can, at any point in time, just look at what it is, and then go in, look at their work, and pass a value judgment, on it. I want to just use this platform to just assure the business community that the essence of this multiple license may actually be for a justifiable reason. May just be for a justifiable reason. But that notwithstanding, I think that the Commission General is also looking into it to ensure that if, let's say, an audit is being conducted, and then there's what we call a transfer pricing issue, is it possible we can have a transfer pricing person add to the team, so they just go and look at it holistically, so that we don't have another team going to look at it to appear as if we are actually creating that kind of anxiety and harassment on taxpayers. Because once taxpayers get fed up, they would actually react, and we need them to be able to help us raise revenue for socio-economic development. And I also want to just say that the taxes that we collect, that is what we use to actually improve upon systems and infrastructure. If the roads are not good, everybody will complain. We need money to fix. So that businesses or businessmen and women can drive comfortably to their places of business and also be able to do their work very well. Thank you very much.
Okay, so thank you very much.
Okay, fine. That's okay.
Thank you very much. Please go ahead, Mr. Naab. Go ahead.
Yeah, you also raised objections that you think that are probably not. Yeah, I think that of course the tongue and the teeth have always been fighting, but they never get separated. So it is with a taxpayer and the GRA, the tax administrators. The law provides that if a taxpayer is dissatisfied with the any tax decision by the Commissioner General, they can react by writing. That is what the law says. Now, the law has demonstrated that you must put into writing the grounds for objection, what it is, let the Commissioner General know. And you have an appropriate time period to do that. Within 30 days, that's what the law says. Then we also have, if you like, true line of demarcation in terms of revenue. What is collected by customs and what is collected by DTRD. The law says that what is collected by customs, if there's any objection, pay all the taxes, and then the Commissioner General will listen to your issue. If it is an issue of DTRD, the law says that if there are issues with some tax handles, those ones pay 30%. Those that do not have any issues, make sure that you actually pay them. And the law says that there is a 30% that the Commissioner General would ensure that it is paid. But the law also provides that based on his best judgment, the Commissioner General can suspend the 30%, waive the 30%, or valid the 30%. That is what it is. But in doing so, the Commissioner General would have to look at the need to raise needed revenue for socio-economic development and the need to ensure that they are able to protect the integrity of the tax system. And the law goes further to say that when it comes to objection, if after 30 days you don't hear from the Commissioner General, deem that the Commissioner General has ignored your objection. Now, I must just say that the Commissioner General is not actually happy about the fact that a taxpayer writes and he doesn't get a response. And he thinks that the response should not only go, but it should go timely. He has always insisted, in fact, Commissioner General as a person, that is Reverend Amishada Usu Amwa, has always insisted that when it comes to objections, not only should we respond to taxpayers, but we must also respond timely. That is something that we all have embraced and we're working around it. Thank you very much.
Thank you very much, Mr. Naab. And as I did outline, ultimately we are looking at feedback and dealing with perceptions that came from the report. You may not, unless you confer with the Commissioner General, be able to take a step on this. But as a moderator, would it be possible for the revenue to say that in line with the restructuring at the Domestic Tax Revenue Division, where now we operate an area office concept with centralized audit teams, is it possible for the Commissioner General to issue a public notice based on that, to say that audits would now only come from the area centralized audit team, and where relevant, maybe from TACA? Would that help to deal with this perception on multiple audits? Mr. Naab.
Yeah. Okay, thank you very much. I think that we just have to do some introspection, examinations, and what have you to actually make a certain pronouncement. I must admit, I mean, as I said earlier, that these multiple audits can be a source of concern. Let me just give a practical example. I was auditing a company some time ago. While I was there, then another letter came introducing some other set of persons to come and audit. I felt very bad. Yeah, so that is that. But you see, the point is that, yes, we are also looking into our systems to improve. And I believe that after this conversation, I would sit down with him and I will look at it. And then I can assure you that his feedback, I would communicate.
Thank you very much, Mr. Naab. And you are assured that the UKGCC would follow up on this as a follow-up from the report that was received. Dominic, a quick one before I go to Mr. Nuer. And this is arising from the COVID-19 Business Impact Survey, okay? The issue around persons being aware of concessions that government introduced to help businesses deal with the negative impact of COVID-19. Now, two quick things on that. There were a number of measures that the GRA introduced to help relieve taxpayers from associated stress from the COVID-19. And the other was actually approved in Parliament. And these two are: one, the 2-month automatic extension of the time for filing annual returns, and then two, donations related concessions on COVID-19. What is the GRA's position on these two concessions that were given? Because they were given for the COVID-19 period, COVID-19 is still with us. We are still trying to get a lot more vaccines to vaccinate our people. For certainty's sake, what is the revenue's view on these two critical measures for taxpayers to be setting on the scope of application? Thank you, Mr. Naab.
Yeah, thank you very much. Tax education, I must say, cannot be an event. It's a process. We actually would have to keep talking and sensitizing our cherished customers, clients, taxpayers about some of their rights, some of their obligations, and some of the benefits that they actually stand to gain. I must actually admit that, yes, a lot of people actually complained, a lot of taxpayers, that they were not even aware of some of these things. You see, largely we use the media. I think that perhaps we probably would have to evaluate how we go about it. And we also occasionally invite taxpayers, that is based on sectors, just to have some conversations, with them. We probably have to evaluate all the channels of education to look at the ones that are more appropriate, that is targeted to ensure that all persons actually are aware of the benefits in the tax laws. Now, when it comes to the release, this the automatic extension, the 2 months. In fact, if you look at it, Mr. Abeku, you will agree with me that it is actually in the law. It is actually in the law that a taxpayer may apply for extension and the commissioner may grant, but it shouldn't exceed an aggregate of 60 days. But following the COVID-19, then what it was that why don't we just grant it to all persons so that you don't have to apply? Yeah, this year, yes, we still have the COVID with us. I have to actually get back to the top management, and then I can get back to you on what the thinking is regarding this year. As you actually rightly put up, in fact, I have even seen a lot of letters that have started coming saying that the COVID is making things difficult. They are unable to actually put together their tax returns and would ask for extension. If we are being inundated with this kind of demands, then what it means is that we probably would have to just look at a way to probably think through re-granting, or if you like, extending it again this year. But as I said, I am unable to make this categoric, statement. I would confer with the Commissioner General, and then he would make a position on it. Donations, yes. As far as donations are concerned, fortunately we have the policy man. I don't think the law is very clear. If you support such, because if you look at our law carefully, that is section 100, donation towards worthwhile causes, and we have spelled what worthwhile causes are. So if you support this area, obviously you will benefit. The COVID-19 actually made that donation very specific. Otherwise, if you donate towards worthwhile causes, you would actually take it as an allowable deduction. And I believe that it hasn't changed. It hasn't changed, and any donation towards such would be appreciated, and the taxpayer would actually also benefit from it. Thank you very much.
Thank you very much, Mr. Naab. And unless the policy man says otherwise, for the sake of our audience, what we're saying is that for the 2 months extension, it is not automatic this year, but the COVID donations concession continues. Is that correct?
Yes. Let me come in here, Abeku.
All right.
Now, for the COVID donations, will be on two aspects. There's the income tax side, and then there's the VAT side.
Yeah.
On the income tax side, once the Commissioner General decides to declare it a worthwhile cause, we don't need any further legal backing. The law allows the Commissioner General to declare it as so. So once he declares it, that's done. The VAT is another issue, because the VAT, when we went to Parliament, it was for the period to 31st December 2020, not 2021. And so that basically has expired. Now, the issue has cropped up. No one was really looking at extending it. But now that it's come up as a point for discussion, I think it's something that we need to look at and see whether we want to extend it to cover 2021 also. That's in terms of VAT. In which case, we'll have to go back to Parliament and get them to pass another resolution extending extending COVID-19 donations as relief supplies for purposes of VAT. Because per the VAT Act, it's only Parliament that can do that.
Okay, so thank you very much. And maybe as a moderator, my quick feedback on this is that those documents that Ankadan has referred to are not read by the general public as such. The VAT relief Mr. Nuer talked about would only be obvious to those who followed the proceedings in Parliament. The general public would be paying attention to the 12 May 2020 publication by the GRA. And those dates are obviously not provided for. So once again, as a feedback on policy and administration, it may be very helpful if the ministry or the GRA quickly issues something in that effect. Otherwise, what would happen would be that on the field, your officers would have challenges because the response from the ministry, from Parliament to the Ministry of Finance did not have the December dates Mr. Nuer has referred to. It is rather the document from Ministry of Finance to Parliament that had the December date. And then the GRA report, the GRA public notice also did not have the dates as in December 2020. So you would see people still giving donations and expecting concessions only for there to be an issue. So a quick feedback on that would be if something can come out to do that. My quick last but one question goes on the policy side again. Mr. Nuer, what would you expect businesses to do to support the quick establishment and operation of the Tax Appeals Board? The reason why I ask this is, as Dominic has just shared, his boss is looking at quickly responding to requests from taxpayers on objections, but the Commissioner General needs to focus on a lot more strategic stuff. And personally, I believe that one of the things that the board would do is to take away a lot of pressure from the GRA with dealing with disputes and having their own domain or their own objective properly followed. So in that respect, this is not we always saying government give us, but what should the UKGCC do to support and facilitate the quick operation of this board, because it's almost 6 months. Sorry, yes, 6 months since the law was passed for its creature, and the only indication we have is what the 2021 budget said, that it should be up in terms of appointments by June. So then, if you could please respond to that, would appreciate it. Thank you very much.
Okay, thank you, Abeku. And actually, to take pressure off my desk also, because as you are aware, when people have a problem with GRA, before going to the courts, they decide to come to the ministry. And so I started working on policy. We have all these things, and that's why that board is supposed to be there. Actually, it's more of a government setup. I really thanks for the offer of help. Unless maybe they want to donate equipment to them, then that's fine. The logistics they need, then those are the things that maybe industry can help with. The actual setup, which is the people, is basically a government appointment. So, but then it's the actual setup, the establishment, that if the chamber wants to help with some equipment, they'll be happy to receive it.
Okay, all right. Then probably my last question to you is on the Penalty and Interest Waiver Act of 2021. A couple of comments that I received prior to the start of this webinar is that when you take a look at the section 1 and the section 2, there is no material difference except for the defined amnesty period. So while section 2 is looking at a period up to September 2021. Section 1 is looking at a period up to December 2021. And the interesting thing is that when you look at the long title, it also talks about up to December 2021. So from the policy perspective, what was government looking at? Because one school of thought was that we did not need Section 1 and Section 2 because they're talking about the same thing without categorizing who are being targeted under those two sections. So from a policy perspective, why the need to separate 1 and 2, and to which categories of persons does Section 1 apply, and to which categories of persons do Section 2 apply? Thank you very much. Yeah.
Okay, thank you, Abeku. It's good to know. In fact, this question has risen up. Now, the Section 1 deals with the waiver itself. And so the Section 1 talks about the fact that where the person does and takes any of the activity before 31st December, he makes the payment of the arrears, okay, and files this, and the commissioner will not recover the penalties. The Section 2 gives the conditions for assessing the waiver. And so it says that you should submit the returns and make the full disclosure and make provision, either pay or make provision to pay. So what it says that apply, because we want to have a good idea by September of those who are taking advantage of the amnesty so that we can plan for the rest of the year. We don't want to wait till 31st December when we have our, let's say, our revenue target. We have an idea of an eye on our revenue target. Then people come in and say that, hey, no, I want to take advantage of amnesty on 31st December. It sort of defeats the whole idea. So it's both a planning process, part of the planning process, that tell us by 30th September whether you plan to take advantage of the amnesty or not. Make arrangement, either you pay or you make the arrangement to pay. The payment can go up to 31st December. There's no problem with that. But the information that you need to give it to us by 30th September.
Okay.
So that's the difference.
Yeah. Okay. All right. So thank you very much, Mr. Nuer, for clarifying that. And my last question to Dominic on the administration part is that based on the 2021 budget, the gross tax revenue is set at 59.2 billion. And of course, the budget has been approved. Various tax laws have subsequently been passed. But the interesting thing that you would note is, as at Friday, the 9th of April, the official government printer, which is Assembly Press, did not have copies of this available for the public. But based on the laws of Ghana, the law should be implemented from the dawn or the start of the 1st of April 2021. What and how does GRA intend to implement this? Because as I just said, the Assembly Press, where we need to get these documents, do not have copies. So how does the GRA expect, or what does the GRA expect from businesses regarding implementation of these laws? Thank you very much. And to quickly add to that, are we confident that the 59.2 billion can be realized if taxpayers do not have official copies of the law as of now? Over to you, Mr. Naab.
Can I come in before that?
Yes, Dan, you can come in.
Now, the 59.2 billion gross tax revenue is not what GRA is supposed to collect. It includes petroleum revenue, which is not, GRA's target is actually around 55 billion. So just to correct, there are some amounts in tax revenue which goes directly into the fund and is not really counted as part of GRA's collection. They collect it all right, but then the accounting is a bit different. So they will not be held to 59.2 billion, they'll be held to around 55 billion. First one. The second one is that, yes, I agree that the laws have been, and I'm sure Dominic will give some information on that. For three of them, for the amnesty, it's clear what we expect to do. For the waivers, even in the budget itself, we said the waivers are for second, third, and fourth quarter. So those ones are quite clear. Levy is clear for the year. The time for payment is given in it. So there are two of them which the time was not given. Actually, what's happening is that GRA is coming out with the guidelines on these ones, and we expect that in terms of what GRA has to do, it will not run from April 1st, but it will run from a later date. I think, Abeku, you are aware that sometimes, normally, even if there's no date given in terms of effective date, we come out with an effective date for when it should take off so that there's clarity for everybody. So that will be done. But Dominic can go on now.
Thank you very much.
Yeah,
so, Dominic, go ahead, please.
Yeah, thank you very much. I think Mr. Nuer has basically handled all. All that I would just say is that, yes, we are developing the various administrative guidelines to ensure implementation. Regarding the non-availability of these laws at the Assembly Press, in fact, I actually am hearing it for the first time today. In fact, I will just, from here, I'll just let the big man know about it, and then he can place a call as to why they are not available. Because once laws are passed, they should be made available. But what it is that sometimes, and I'm sure Mr. Nuer can even explain it better, when laws are passed, they have to be properly edited to be sure that it is coming out error-free and a whole lot. So sometimes that's what actually creates the problem. But as I said, we would find out because they must actually help us, have the laws reach every nook and cranny of this country. So if we really are getting some inhibitions, we need to find out how we can help.
So thank you. So just a takeaway point for our audience. If we have not received copies of the laws from the Assembly Press and the GRA has not issued public notices to the effect on when they intend to enforce compliance, taxpayers should not be too worried on sanctions and penalties arise. Hello, Dominic.
Yeah. I think I lost you somewhere.
Yes, what I'm just trying to summarize for the sake of our audience that as long as the GRA has not issued its public notice setting its intended date of enforcement, taxpayers should not be too worried, especially when they don't even have copies from the official government printer. Is that correct?
Yes. Let me come in here. I think I distinguish between the various acts. So yes. Let's be clear on that one. What I'm saying that for the penalty and interest waiver, now in that one, the effective date is actually inbuilt in it. So whether we issue an effective date or not, it is running. We say that you can start submitting from April 1st. What we expected was that there's an application form which we are working on. So that application form, I think, as of yesterday, they are basically almost completed. I'm sure by the end of the week or early next week, everything will be in place for you to take advantage of that one. For the waivers, the other waivers, the income tax waivers, the 30% rebate, it's made clear that it's for second, third, and fourth quarters. So it means you get a waiver for that period as and when you are submitting your payment. So you do the computation, and so basically it means that you have to revise your estimate and put that waiver in it for yourself. Tax stamp, no one is collecting it from them for the second. But there are conditions for all of these waivers anyway, that you must fulfill your first quarter obligation. So you must make sure that you fulfill that first quarter obligation in order to be able to obtain the waiver, which starts from the second quarter. And any other obligations you have in terms of other taxes apart from income tax, make sure you fulfill them. So these ones are quite clear in them. The public notice is just giving additional information on how to go about it. The financial sector levy, recovery levy, as I mentioned, is inbuilt. It says that the payments will be in 3 installments starting from 30th June. So you do your annual computation, you divide it into 3 and pay from June. If it happens that there's any revision you need to do along the line, you revise it and make those payments. The energy sector levies, normally there are two windows where they're on petroleum for doing petroleum. We've missed the second window, which is for this month. So automatically it should be the next window, which is the end of April. That's May. The only one which the directive clearly needs a directive on is the COVID health recovery levy. And that, as I said, isn't, yes, the assent was on 31st March. I mean, it was next to impossible for anybody to start from 1st April. We are looking at 1st May, but as I said, there'll be a communication to that effect. So that's what we are looking at. So it's not for all of them. The only one that we can say that, okay, there's no real date in terms of how to do it, and then we need to issue a date is the COVID health levy.
Okay, so Mr. Ria, you've addressed the question. That is where the major concern is. For the other benefits, we'll chase the GRA anyway for it. The critical thing is the COVID-19 health levy, which would require updates to systems amongst others. And 3 years down the line, somebody may not remember that it was issued late, and some of your overly enthusiastic officers may begin.
There'll be a publication. Right. No, there'll be some publication that everybody can wave in the face of our officers.
Okay,
that great. This is what was done. Yes.
Great. So thank you very much. So thank you so much. As a moderator, what I've attempted to do so far is just to make sure that we are focused on which reports we are discussing and ensure that the responses are quite targeted. I have received some questions that I want to ask by way of chat, and Daniel and Dominic, some of them may go beyond some of the specifics, but I hope you would accommodate those questions. So the first question I have is that with GRA, and of course this goes to Dominic, with GRA going online and allowing companies to pay online, are you offering any training for companies as to how to use the systems? And does the system allow us to correct errors that may be made when inputs are done? So Dominic, please help us with that question. So this question relates to the online filing, online payments, and the issue around the ability to make corrections to the system. And finally, training for businesses to use this platform and use it quite efficiently. Thank you very much.
Yeah, thank you very much. Yes, training. In fact, we've had some tax education on it, trying to actually let the public know how it is going to, be done. So, but that is not the end of it. We'll continue to actually sensitize this communication plan has been drawn. So very soon you will see some of GRA on radio, TV, and at certain programs trying to actually help with some of these things. And when there are errors, of course, online filing, if there are errors, there will be a window for you to make those corrections. All those things have been designed as part of the program.
Okay, so thank you very much, Dominic. And just to summarize for our audience, we should expect additional information or public notices on trainings and how these online platforms should be used. Thank you.
Exactly.
Mr. Nuer, this question comes to you, and I can understand the concern of the sender. A look at the 2020 budget showed that when you compare the taxes that we get from PAYE, for example, to taxes that are paid from self-employed, last year it was about 17 times to 1. Okay. This year, it's about 15 times to 1. So the question the person is asking is, you are expecting to increase tax to GDP ratio from the current 12-13% to about 20%. And how confident should the business community be that you won't just come back to those who are already trying to be compliant, but how you are going to widen the net to ensure that those who are burdened do not get overburdened? So, Uncle Dan, if you can assist with this question. Thank you.
Okay, thank you. Now, let me make little correction in terms of the figures. I agree that the self-employed to PAYE, but let's note that there are other taxes paid by individuals aside of what goes into the self-employed personal income tax as we describe it. And so let's just take that note that yes, it might seem as if self-employed are not paying that much, which is true. And it's something which we are working on. It's one of the big fights that we are having, and it's one of the strategies we are looking at. We have what we call the self-employed project that we are putting into place to try and get not necessarily what's the word for it? Not necessarily the very low income people who basically actually don't even fit in the tax net, but then high net worth individuals. And so we are working on that, high net worth individuals. So under the current exchange of information, automatic exchange of information, and let me sound that caution to here that anyone who has, any individual who has money sitting outside accounts in other jurisdictions and is not declaring it here, is making income and not declaring it here, we are in a position now to receive, the last hurdle is this quarter. We'll clear the last quarter this quarter. We are in a position now to receive that information. So I would suggest that they take advantage of the amnesty and declare those incomes, because GRA has been instructed, and not just instructed, in fact, it's part of their mandate, to come hard on any individual who we find in that category, who is keeping his money out of Ghana because he doesn't want us to tax it. So this is a good opportunity for us to make that caution and let people know that yes, we are going after individuals also who really should be paying quite large sums of money. Some of them even more than some of the corporates are paying, and they are not doing it. Thank you.
All right. So thank you very much, Mr. Naab and Mr. Nia, and you can be assured that the UKGCC would really support you if you are looking at some of these issues.
Thank you.
The last combo question I have for Dominic, we have just about 2 minutes to go, is that, Dominic, the concerns of this person is that you want us to pay tax, that is no problem. But sometimes when you pay tax, you may end up overpaying. And recognizing that cash is king, how confident are they that when they overpay, indeed, the revenue would give them back their money? And the other issue that they notice that because the general withholding tax rate on foreign providers of service is 20%, what they notice also is that foreign companies just gross up those invoices and make sure that they pay the entity in Ghana effectively the one paying those taxes. Are there going to be any change in our withholding tax laws so that we can also relieve local companies of this additional burden as a result of withholding tax? So Dominic, those are my 2 last questions, and I would appreciate if you can help us address them in 2 minutes. Thank you very much.
Just quickly, the first one was what?
The first one was on giving back monies that have been overpaid.
Okay, that's fine. That's fine. My line went, had a little problem. Okay. Yeah, when I sit in the Commissioner's office, almost every day, in fact, on my table, I have about 5 refund cases that taxpayers have applied, and we are processing them. We have a dedicated refund account that we actually pay for. So as for that one, it's not an issue at all. But you see, if you say you have overpaid, we need a confirmation. So an audit will have to be conducted. And here comes, you say we have to confirm with an audit. They say, no, don't come. Sometimes that is what actually delays the process. Otherwise, once an audit confirms it and you put in an application for a refund, it will be done. That is that. The second one, I think that it is actually perhaps our education is not quite effectual, if you ask me, because with all the tax, the law is very clear. If you are a non-resident person, depending on the category of bouquet of service. If it is 20%, it is 20%. Why will you gross up? That for me is not right. It's immoral. You get it. I must admit that yes, we have heard packets of such complaints, coming up. That because the local companies have either withheld or threatened to withhold, then they have to gross it up. That is not right. I think that Mr. Partner Abeku and others, let's ensure that this education actually is widespread, that when you pay your taxes, you're actually helping to develop the country that you are doing business with. So the non-resident persons who are doing that, it is wrong, and we must find a way of correcting it. And I think that is also something I've just documented. As part of our education, we need to actually ensure that this area is highly, highly emphasized. Thank you very much.
Thank you.
Let me come in here quickly. Or do you have a question for me? Then I'll add it to it.
No, I don't have any question for you. I'm just trying to wrap up so that we stay in time.
Okay.
Yes.
There's an interesting thing here. And now the way the globe is going with exchanges, what it basically means that is what the gross means, that's what the person has charged you, and is going to pay tax on it in his jurisdiction. Because if I'm sitting here and I know, and you give me a figure and it's a tax-free amount, I'll use the guaranteed tax-free remuneration, which means someone has paid the tax for you somewhere. I'll actually gross up what you've brought up with the tax that is due in my jurisdiction. And that's where I think we need to do the education for both our people here. And once we get to exchange more of this information with other jurisdictions, some of these things will stop. Because once a person is entitled to a foreign tax credit, if he pays here, he gets it in his home country. It's not true that it's not a cost to the person. And as I said, Abeku, you and I, we are all aware of the foreign tax credit system outside of DTEs. So it's something maybe we need to do a little more education on and get people to understand and appreciate. And what he also does that if the person has a permanent establishment here and is grossing up, it means that amount is included in his income anyway. And our tax, that's the tax on tax issue. Our charge tax on tax. At least some of us know how to do the computation, not everybody. So let's avoid this issue. And the services, is it that we can't get the services here? That's the question. We are trying to build local content. Quite a lot of the services that we get from non-residents, we can actually get locally. So let's try and also build our local economy and get some of the services here. If they'll be charging us extra for services from outside. Thank you.
All right. So thank you so much, Mr. Nuer and Mr. Dominic. Now, you have helped us to address all the questions that we certainly have for today. In this dialogue, the quick reminder is, as we said, we would get some of this feedback compiled for you as audience feedback. We would add 2 from the GRA led by Dominic Naab, 2 from policy led by Mr. Daniel Nuer, 1 from the UKGCC, and of course, I have asked my question already. I know my answer didn't come, but I know I can always get my answer. I would like to say thank you so much for the time that you have spent with us. To our audience, I would encourage you to follow the various social media handles of the UKGCC. And as a business, we would encourage you that together we can be strengthened to do the things that we ought to do better. So please try and join the UKGCC as a member so that we can continue this advocacy, this networking, and these trade services work together. So I will end and hand over to Stephen by saying that thank you so much, and may God really bless our homeland, Ghana. So over to you, Stephen, for the closing remarks. Thank you very much.
Great. Well, thank you very much, and what an amazing discussion this last hour and a half. First and foremost, I would like to express my appreciation to both the speakers and the moderator for their valuable contribution during the course of this event. And of course, my deepest gratitude goes to all of you who have attended this webinar to help make it such a successful event. In my capacity as a chair of this event, I thought it would be appropriate and useful to summarise some of the themes as well as the ideas emanating from this webinar. Government is seeking to increase its tax to GDP ratio to be aligned with its peers in the region. Government has clearly responded to the private sector's concerns around the tax audits and by the establishment of the Independent Tax Appeals Board. Changes in legislation allows companies to come forward on a voluntary basis to correct errors in tax declarations without penalty. And I would encourage all of you to make use of that if you are in that situation. Our moderator at the beginning suggested that 2 issues should be identified to work on as a result of this event. I will offer 4 points for both the UKGCC team, the GRA, MOF, perhaps to consider reverting to some of these issues in the future tax dialogue events. We heard from the Ministry of Finance that the tax education is not an event but a process. So my question is, how can we formalise this process effectively and communicate changes to the tax policies regulations, given the low awareness that many businesses have on their obligations and the opportunities in that legislation? There was an ask whether it's possible to consolidate all the tax laws into a single document. Hopefully a simple question to answer. Is it possible to support a workshop on how to use the new GRA tax payment digital platform? I think that would be a game changer in terms of tax compliance, making it easier for many people to comply with their tax obligations, but also reduce the friction in the system as well. And finally, how can we reduce the likelihood of multiple tax audits in the same business, on the same business within the same quarter of a year occurring? Once again, I thank you to our speakers and moderator. And if you have any follow-up comments and questions from this event, please contact the team at the UK Ghana Chamber of Commerce so they can take them forward and incorporate them in future Tax Dialogue Series events. Thank you very much.
Okay, so thank you. Bye-bye.